Hello everyone, my name is Michael Wan and this is my financial analysis on Pfizer Incorporated, a large pharmaceutical company that is known worldwide. So first, a little bit about Pfizer. Pfizer is a pharmaceutical company that was founded in 1849 by Charles Pfizer and his cousin Charles F. Ehrhart, who are both from Germany. It first started as a chemical business that produced an anti-parasitic medication called Santonin. Their current CEO is Albert Bourla, and Pfizer is headquartered in New York City. Pfizer is one of the world's largest pharmaceutical companies, and back in 2018, it ranked number 57 on Fortune 500's list of U.S. corporations by total revenue. Some of their more famous products include Lipitor, which lowers LDL cholesterol levels, Viagra, which treats erectile dysfunction, and Celebrex, which is an anti-inflammatory drug. Pfizer also has several R&D facilities across the world. There are local facilities here in Massachusetts to Connecticut, to international facilities such as those found in Belgium, Japan, and India. Here we have Pfizer's financial data and profitability ratios. For the most part, their numbers have remained relatively consistent throughout the 3 years. However, there is a notable but minor downward trend as revenue, cost of goods sold, gross profit, and operating profit have all declined. I would like to draw your attention to the net profit and total assets, which saw a large decline between the 2017 and 2018 year, followed by a modest increase in the 2018 to 2019 fiscal year. This tells me that Pfizer experienced lower performance and profitability levels, and that there are several events that affected Pfizer in 2017. What hurt them is that they lost exclusivity rights to several drugs. A rival company released an autoimmune drug called Enbrel, which affected the sales of Pfizer's own autoimmune drug called Xeljanz, and that the company's top-selling product in 2017, pneumococcal vaccine Prevnar number 13, showed lackluster sales the following year. I would also like to mention that in 2017, there were no major announcements, acquisitions, or developments that really excited stockholders, and that resulted in a sluggish year for the company. Next is a percent change analysis and some information from the balance sheet. There are some pieces of information that I would like to point out. The decline in operating profit shown in the 2018 to 2019 fiscal year shows declining sales of their products. However, at the end of 2019, their net profit recovered. Their net profit recovered, which could be due to decreasing expenses, which is reflected in the 9.1 decline in the cost of goods sold and the success of two of their newer drugs. They released in 2018 Ibrance, which treated breast cancer, and a blood thinner called Eliquis. In 2018 to 2019, Pfizer showed a negative 34.3% decrease in current assets. This could be explained by Pfizer restructuring their business model. In 2018, Pfizer announced that it would reorganize its business into 3 separate units: an innovative medicines division, an off-patent drug division, and a consumer healthcare division. I should also like to note that in 2018, Pfizer also announced that it would end its work on research into treatments for Alzheimer's and Parkinson's disease. By ending that research, it resulted in the loss of 300 research positions. I would also like to point out that their liabilities had steadily increased throughout the 3-year period. Next, we have the efficiency ratios. Once again, all their financials look fairly consistent throughout the 3-year period. I would like to draw attention to their days in inventory, which is quite a large value, and in the 2019 year, their days in inventory showed 291.8 days in inventory before it is sold. From what we have learned from our texts, pharmaceuticals are a specialty manufacturer with an average days in inventory ranging from 100 to 150 days. Pfizer is well above that average, which is a sign of their inability to sell off their inventory. Their payment period is also rather large, with 307.3 days for the 2018 to 2019 fiscal year. This means it takes Pfizer about 307.3 days for them to pay their bills, meaning that they have worked out favorable payment terms with those they borrowed money from. Lastly, I would like to mention that they do not have a large cash collection cycle, so they do not require a large amount of working capital to stay in operation. Next, let's look at the liquidity and leverage ratios. For me, I feel like this is where things get interesting, especially when we look at the current and quick ratio. For the 2017 to 2018 year, we see that Pfizer has enough to pay their bills, but for the 2019 year, both the current and quick ratio drops below 1. This means that they do not have enough liquid cash on hand to pay their bills for the year. I think this could be attributed to the inventory problem that Pfizer has, and that this shows that Pfizer's liabilities outweigh their assets. Next, I would like to point out that their debt-to-equity ratio is below 1, which this means that they have invested more money than they have borrowed, and that they do not have a lot of debt, which is quite favorable to investors and banks. Finally, their interest coverage ratio is quite high, meaning Pfizer has sufficient earnings to pay their annual interest costs. So, after looking at Pfizer's financials, let's look at the profitability ratios for two of their competitors, and I decided to pick Procter & Gamble and Johnson & Johnson. Procter & Gamble specializes in personal health and care products. It first began as a pharmaceutical manufacturer that developed products to treat symptoms like overactive bladder and osteoporosis, but since has shifted towards a simpler but less complex approach that's easier to manage and operate. Johnson & Johnson, on the other hand, develops medical devices, pharmaceutical products, and consumer goods. Johnson & Johnson also showed up on the Fortune 500 list back in 2018, ranking at number 37 for lists of largest U.S. corporations by revenue. So, first, Procter & Gamble's numbers will be on the left side of the screen, while Johnson & Johnson's numbers will be on the right side. These two companies see a higher amount of revenue compared to Pfizer, with Johnson & Johnson displaying an upward trend across the board. 2017 proved to be quite the profitable year for Johnson & Johnson, as they acquired Abbott Medical Optics, and they bought out a Swiss drug maker known as Actelion. With these acquisitions, Johnson & Johnson was able to get into the eye care and pulmonary industry. Meanwhile, business looks pretty good for Procter & Gamble, but they saw a dip in their operating and net profits at the end of the 2018 year, only to bounce back in 2019. As of why, from what I found out, the biggest influence to Procter & Gamble's 2018 dip is the change to the online shopping environment. Since Procter & Gamble sells consumer goods, they lost a large market share due to the shift to online retail as small upstarts like the Dollar Shave Club, The Honest Company, and Bevel grew through online sales and target customers through new forms of media advertisements. This is shown in their reduction in sales as shown by their operating and net profit decline. Next, we have the profitability ratios for P&G and Johnson & Johnson. Once again, Procter & Gamble experienced a dip in 2018, just as shown from the previous slide. Johnson & Johnson, as I mentioned before, they had an incredible couple of years since 2017 when they acquired Medical Optics and Actelion. So let's look at the gross margin for the three companies. From what we can see, Pfizer has an excellent gross margin in comparison to their two competitors. Johnson & Johnson was also doing quite well, and Procter & Gamble, even though it is the lowest of the three, still has favorable margins. From what we have learned from our book, margins can vary between industries, but a margin greater than 20% is favorable, so all three companies are doing quite well. We have also learned that pharmaceutical companies tend to lean towards the higher end of the margin scale due to the low cost of goods sold and their customer-centric business strategies and exclusive products. Here we have the operating margin of the three companies. The operating margin measures how much profit a company makes on a dollar of sales after paying off production costs such as wages and raw materials. From what we could tell here, all three of them have favorable operating margins, even though Procter & Gamble experienced a dip as shown at the end of the 2018 year. They have since recovered by the end of 2019. Next, we have the net margins for the three companies. Net margin measures what percentage of revenue remains after paying off all expenses, including interest and tax. Pfizer has once again shown to be quite profitable compared to the other two after all their expenses have been paid, even with the end of the 2018 year when they experienced sluggish sales. Johnson & Johnson has shown to grow by a considerable amount by the end of 2018, while Procter & Gamble had a bad end of year at 2018, but they have once again recovered by the 2019 fiscal year. Next is the return on assets, which measures how much a company earns based on the assets that they own. Pfizer saw their assets drop by the end of 2018 because they stopped their research on Alzheimer's and Parkinson's disease, and they also decided to restructure their company. This may have most likely resulted in the decrease in assets. There is also a noticeable dip in Procter & Gamble's 2018 year, which again reflects their decline in revenue for that year. Meanwhile, Johnson & Johnson is sitting quite comfortably as they had an excellent 2018 year due to the two acquisitions that they saw and increased sales. Finally, we turn to the return on equity ratio. This measures how profitable a business was in relation to the shareholders' equity. Once again, the data pretty much reflects what we have seen with the other profitability ratios, including Pfizer's sluggish 2018 year and Procter & Gamble also experiencing a sluggish year in 2018. Meanwhile, Johnson & Johnson has shown tremendous growth since 2017 and appears to be quite stable since. So, in conclusion, should we invest in Pfizer? I presented two sides of the argument, why you should invest and why you shouldn't invest. First off, why you should invest into Pfizer. They are involved with COVID-19 research, and many of their preliminary tests look quite promising. They have a large amount of assets and revenue, which shows signs of longevity. They're not going anywhere for quite a long period of time. And pharmaceutical companies have shown to be quite profitable with their high margins and low cost of goods sold. On top of that, Pfizer is looking to develop in more countries. As to reasons why you would not want to invest in Pfizer, they have low liquidity ratios, which could make paying off some of their liabilities an issue. They're also seeing a rise in liabilities, as shown in the 2018 and 2019 year. Their days in inventory shows that they have problems selling off their inventory, which may result in more liabilities for the company. They seem to be taking on more debt as well. As of May 7th, 2020, they currently have $52.29 billion in total debt. And as of the second quarter of 2020, Pfizer has shown a decline in their revenue once again. A couple other things I would like to point out is that it's expensive R&D costs to develop new drugs. It normally takes on average about $1 million to develop the new drug, and it's not always guaranteed to be a hit with the market. And the last thing I'd like to point out is that there are multiple companies involved in COVID-19 research, not just Pfizer, so they have competition on that front as well. With all of this in mind, I feel like investing in Pfizer is not necessarily a good option at this time, even though they have a large amount of assets and revenue due to everything else going on with the company. This is a list of all my references that I use. I would like to thank you for taking time to watch my video. I hope you enjoyed it and have a wonderful day.